of June. Happy Monday. This is the week of June 6th through the 10th. Let's get started for the Pulver Report. Let's jump into the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the deal. If you're following me out there on social media, this is how you can find me. YouTube.com/Chris Pulver. Everything else real Chris Pulver. No underscores, no letters, no misspellings, no duplicates. Those are scammers. I will not message you directly unless you message me and I'll reply. But I'm not reaching out to anybody soliciting, so make sure you report and flag those type of accounts because they're all a bunch of phonies. All right, everybody, happy Monday. Let's get started. I want to jump into the news, see what we have lined up this week. We are on a bank holiday for most of Europe. That is Whit Monday, at least in Switzerland, and also throughout the Eurozone. So, interesting. Whit Monday. Not sure what they celebrate. Other news this week, cash rate decision for the Aussie. Expected to raise rates by 40 basis points. That'll be interesting. We're seeing the RBA start to catch up with the RBNZ. So that is midnight, 12:30 a.m. Eastern time. So during that Australasia session on, I suppose, Wednesday's trading day. So RBA statement to go along with that rate decision, which is expected to increase. Perhaps the market had priced it in. We see some stronger Aussie recently. Also, ECB rate decision on Thursday, 7:45 a.m. Eastern time. Then the press conference with Christine Lagarde afterwards at 8:30. We have seen some movement. It's not quite as consistent and as volatile as what we saw with Mario Draghi back in the day, but no slouch. So we might see some good euro volatility this week. Unemployment claims also coming in on Thursday for the U.S. expected 205, and then because we had non-farm payroll on for the U.S. last Friday, we have Cad employment this week, forecasted for a positive print 25.5. The Cad's also been pretty strong thanks to oil prices. Then we have another speech by Christine Lagarde and University of Michigan consumer sentiment. So we've turned the corner recently on the SPY. Last week was a bit of a mix, but coming off that Memorial Day week, we had a nice rally. So here's the SPY looking at a pre-market 415. That's a big open to the upside. So looking at a nice positive gap. We're going to see how quickly the market wants to recover. 415 does not put us past the highs. We had a recent high up here around 417. If I zoom in just a little bit. And year to date, where are we year to date for the markets? So as of last Friday's close, the Nasdaq is still down 23.2%, S&P down 13.8%, Dow's down 9.46%, 10-year still up just shy of 3%. Bitcoin hanging out around 30K. We'll take a look at that. ARK, everyone's watching ARKK because over the rally we saw in the S&P, that little 7% recovery for the end of May, ARK recovered like 17%. You know, again, ARK is essentially pegged to all these, disruptive growth and innovative technology stocks, Roku, Tesla, Teladoc, things like that. But anyway, it's going to recover faster, right? Doesn't mean that it's going to recover at new highs. So I still think you need to be careful on your tech stocks and tech picks. We also had an Amazon split. So if you're looking at Amazon stock this week, you're going to see it's way different than it was last week. 24.47, but I believe by Wall Street's open, this should go into effect. It should be trading for about $247. Maybe less actually. Might be trading at like 147. I thought it was a 20-to-1 split, but I could be wrong. Could be a 10-to-1. Either way, Amazon's price is going to get more appealing for those that feel like it's too expensive or they don't understand how to use fractional shares, which again, you can do that right now and still buy Amazon for whatever dollar amount you want to allocate. So that should be taking place this week. Any other earnings wise this week from what I read, light on the earnings front, maybe 60 to 70 companies reporting earnings. Last couple of weeks have been pretty solid earnings wise. Oil's a big story. Dollar. Let's take a look at all those things. And let me get logged in here to the YouTube page. Make sure everyone's alive and well. Say hello. All right. Who's in the house today? William's here this morning. Chris is here. David, Catherine, Lady Van Posh. Wayne, Jason, Andrew, Daniel, good to see you. Derek, Tom, Russ, nice to see everybody this morning. All right, happy Monday. I was going to take a look at the dollar index right here. Let's go US dollar and DXY. US dollar sitting at 12,663. If you remember from last week, we did have a positive job print, but a miss in average earnings and a miss in unemployment. We also have unemployment claims coming this Thursday. So the big story, in case you're not following along, big story is China's reopening. I mentioned this last week in my trading rooms. Benji says hi, by the way, if you can see him pop up on my screen. What up, dude? All right. China is looking at about 33 counts of financial accommodation between supply chains, real estate. Let me find the picture here. Okay, so 33 fiscal, financial investment, and industrial measures, energy, food security, stabilized supply chains, China tech, which was the the anti-story last year. A couple ways to follow that. CQQQ. We're looking at a 47.19 stock. We've been beat down off these highs. Just take a look at the discount. So high to low, 64% off the recent highs. Okay, CQQQ. You could also look at stocks like Alibaba, trading at 93.21. Pre-market's already at 99.70. I was trying to get a buy here at 75, and I did not get that fill. So I saw the low here on 73, tried to get an equal low at 75. I didn't get the fill, but I don't feel like I'm really jumping the gun here. We might still settle in a little bit lower. It may not turn on a dime, but I would not be afraid to get some exposure in here, maybe right around this 99 handle, and then have small position there, and then have another buy trade right around 62. I think that Chinese stocks are probably going to do better than the U.S. Over the next probably 4 to 6 months. How much better? Well, I mean, considering this is what you'd like to see. This was a 75% discount. It kind of parallels what we just saw in U.S. tech, which is kind of crazy. 75% on Alibaba, and let's say that it recovers. Let's say I'm getting in now, or I'm dollar cost averaging in. So if I get in now at 99 and this thing goes up to, the yearly pivot, which is not a huge recovery, it's still a 66% position. There's also a massive gap back here that's a 50+% gain. So you're looking for growth opportunities. I feel like China tech is going to perform better than U.S. tech at this time. So BABA is a thought. BIDU, that's Baidu, that's a thought. These are stocks that I'm interested in. We'll be talking about these this week. Again, Baidu, I just missed my buy trade at 100. We had lows at 101.72. That was really disappointing because I had equal lows over here back in 2020. So I didn't get filled where I wanted, or else you'd be up $40+ a share, which obviously is a nice little chunk of profit. I don't think I'm going to get a trade back to $100 a share, so it's going to be, getting involved now, lowering my cost basis, but willing to hang on to this stock to probably, 200 to 220. Another run towards some of these yearly pivots is what I'm looking for. Even if we had a high to low, something like this, we have a high, we have a low, and the market recovers halfway. If it's a 50% equilibrium, that's good enough. That's a nice chunk of profit and good opportunity, in my opinion, on some of these Chinese tech plays. So Baidu, Alibaba, 10 cents a good one. You want to trade some ETFs, CQQQ like I showed earlier, which will be a basket of those tech-related stocks, and then KWeb is another one. So we'll be discussing these this week inside of Equities on Demand. Okay. Good stuff. All right. That's Chinese tech news this week. Let's go dollar index, so DXY. Zoom back in. We're still kind of stuck between a couple levels. I'd like to see another push lower on the dollar for an ABC correction. That would be something along this line. So high to low, lower high to lower low. If we also have it play out with some flat patterns and some wave cycles, you might have a high to low, pull back here, pushes down into like a 18127 extension off of this high to low. Then we pull back to retest the backside of the trend line, or we pull back to form a flat pattern using the monthly pivot as resistance, and then drop back down. Keep an eye out for past resistance. Keep an eye out for past resistance becoming future support. This dollar index might just be a big correction. Okay. All right. So that is dollar index, what I'm watching. Currency strength chart right now. We see pound got a nice little bump this morning. One of the strongest currency pairs. We see the CAD continue to rally with oil. Take a look at oil here in just a moment. Also, risk on pairs like the New Zealand and the Aussie. We have a risk off pairs, pretty much all lumped together. The euro, the yen, the Swiss, and the dollar all weak this morning. So we're seeing some risk on trading. Like I said, also there is some lighter trading coming through the London session with the holiday, the bank holiday, Whit Monday. So that is that. All right. And let's go oil. Oil was a big story last week. OPEC said they're going to increase production, but the market didn't seem to price that in or care. Oil still is looking to stay pretty elevated. We have highs in March around 128 to 129, so right around that 130 handle. The question now is, will China's reopening start to increase that demand to where we are breaking these 130 levels and starting to head up towards the 147 highs, which are all-time highs, which we talked about last week? Okay, so I am more of the thoughts of this. I think that this area, high to low, we're pulling back into that same high. At least in the near term, if we hit resistance here around 128 to 129, I could see there being a bit of a reset, okay, or at least a range to trade on this before oil continues to push higher. That's my thought. Now, I could be dead wrong, and this thing could just break through 130, nothing to stop it, goes up to 147, maybe something to stop it, like all-time highs. But if that's not enough, we're looking at that potential energy crisis or containment, where special petroleum reserve, OPEC increasing production, supply and demand cycles and forces are going to start driving prices lower. But it's just tough. We're seeing resilient oil right now, rallied on production news, right? OPEC's going to increase production. Market rallied. Came down and tapped the weekly and the monthly pivot. This is the candle, in fact, right here. The day that OPEC announced increasing production, you had this long wick to the south and bullish price action for 2 days. So on even, bad news on oil, the market is still rallying right now. So that just shows me that the bulls are determined to take this, probably retesting the highs or close to it. And this may be a very thin order. There might be very little retail trading to the upside. Very few are probably long on oil. But that's also what probably gives this more momentum to the upside if we do end up breaking these 128, 129 highs. So just keep it in mind. You could be breaking those highs. Watch it, buckle up. Okay. All right, so that's that. Let's see here. Any currencies you'd like me to take a look at? This week's pretty light in stocks. Next week's going to be super busy. 6/17 expirations coming not this Friday, but next Friday. So lots of expirations to discuss with the Equities on Demand group and manage. This week is going to be pretty light. In the next 15 minutes, I'll be putting on some new credit spreads, or I'll be looking to add some additional covered calls. Robinhood, International Paper, Uber, KWeb, I'm looking to buy some shares. CQQQ, looking to buy some shares. Probably do something also around Alibaba and Baidu as well. I want to get some allocation in my portfolio for some of that Chinese tech, looking for some recovery over the next 6 months. And we'll see how energy plays out. Still long on energy, still long on commodities, still long on oil and gas. And we'll see if we have also wheat, corn playing out as well. Pound CAD, Juwan's asking for Pound CAD. Sure, I like Pound CAD. I like Eurocad and Pound CAD both. I think the basket in general, the Eurocad setting up for a pretty solid move. We're at 1.344, looking to retest these lows. I was anticipating some consolidation here. So let's see. If we have some lows, what I'm going to look for is this. Let's plot some relative strength right in here. So if we do stab these lows, okay, if we stab these lows, we are noticing that we have some equal lows or slightly lower lows in price with some disagreement. Okay, same thing here on the relative strength. We never quite reached oversold conditions on this daily time frame. All right, which means there could still be some room for this to push down into oversold territory. But if you look left on the Eurocad, there's not too many bounces here. We have a major low around 1.30. We're trading at 134. So can we push another 300 to 400 pips to the downside? Sure. Can we push down here towards these major lows? This is back in 2012 at 125. Sure. So I'm not calling the lows on the Eurocad, but I do think at the given time, again, summer trading, possibly some range highs, range lows, I would be interested to see if this area can hold and give us some ranging. We might have to get on the right-hand side of the trend line here, see if the bulls can come back. We have news on Friday for the CAD that might support some of this, CAD weakness here in the near term. But I am currently long, like my positions, I'm long Eurocad right now, small, and I'm willing to take it down to 1.30 and stay long. Willing to take it down to 1.25 and stay long. Same thing on Pound CAD. Pound CAD, I'm long. Right now I'm looking at a move back to 6,200 to 6,250. That's my first entry, and then I have entries that have been stacked in down here towards 5,800. So if we can hold these current areas, hold this area, I'm looking to see if we can pop back up here towards, that's around 6,000, but I'd like to revisit these highs around 62 to 6,250. So I'm long, and again, I might be wrong. I might be sitting on this trade longer than I want to be. But if I look at this on the weekly time frame, I'd rather be a buyer than a seller. We're sitting here near these, 5-year lows. If we go any lower on pound CAD, we're talking about 5,300, maybe 1.50. I see this historical low back around 2010, which is 1.50. So look at a low right there. I don't need that to be as thick. Change the color to black. There we go. And try that again. So right in here. A couple of major levels of support I'd be willing to buy from. So if this doesn't hold currently, if this support for the last 7 years doesn't hold, and this low doesn't hold because of those 7-year support levels, then we might be drifting down into this historical low, which I'm still interested in buying. So if I'm trading small and I'm building a position, I'm more interested in building off of major historical lows than I am trying to sell it right now for an extra 200 to 300 pips to the downside, right? So I'm starting to scale in and be long pound CAD. Dollar CAD, let's take a look at dollar CAD. Dollar CAD, I still like the range around 2,400 to 2,950, or just call it 2,400 to approximately 1.30. So we're trading at 25.42. Something I'll be looking at this week is if we can drop into around 2,400, and then make our way back up towards 1.2950, 1.30. This also could be an inverse of oil, right? If oil hits, so we had our March high at 128, if we're making our way back up to the same high, if we hit resistance around 129 to 130 on oil and we reject off of that, that should be reflecting the dollar CAD bouncing off this 124 to 124.50 handle. And we could have some range trading. It could be something like this, where it's a range. It could be holding sideways support resistance, but I'll be watching dollar CAD for that exactly. Okay. All right. Yen crosses. Got a lot of requests for yen crosses. That's fine. Look, yen is going to stay softer. We talked about this, like, don't force sell trades on yen crosses. We have some stop sell orders, because again, I like the opportunity of selling high, but it just seems like the Bank of Japan has some other agenda that is not a strong currency. So we had our corrections here when we had the downturn in the market in April and May, and the market responded very favorably to a move right back up to these highs. So I'm not interested in selling the highs. Okay, what I'm interested in is if price hits the highs, looking for a stop sell and see if price can close back below those levels and then start to sell with small trade sizes. What I don't want to do is, it looks attractive to sell it right here. But if price just blows through that high, I don't know where the high is going to form, right? You can look at divergence, you can look at all these beautiful alignments, but the Bank of Japan might have another agenda, which is weaker currency, and it's not worth fighting it. So I think stop sells are going to be what we discussed this week in the flex room. Watch your highs, set your chart alarms, but stop sell orders to make sure that price has to stop on its own, come back and fill. We can put a stop loss above a U-turn. I'd much rather take that approach than trying to call the top, because these JPY pairs just continue to push. And that's on all of them. Aussie yen, Cad yen. Cad yen has some of the best alignments I've seen in technicals. We got bar counts like crazy, overbought conditions like crazy, and yet it's up another 70 pips from last week. With a 600 pip move, if you look at the daily chart, let's go Cad yen, this thing's up 600 pips from the last 2 weeks, which is insane. It's gone literally straight up with 9 candles in a row now. This is a daily chart. How many candles in a row? 1, 2, 3, 4, 5, 6, 7, 8. Today's 9 candles in a row. We have 2 weekly pivots, 4 daily pivots. Doesn't freaking matter. I've got some of the best alignments I could see technically. 3 weekly pivots here and a monthly. Another monthly. 2 weekly pivots here. 4 daily pivots. The market doesn't give a crap right now, right? Is this going to make its way up to 106 before it drops? Possibly. So I don't want to call the top. We adjusted a trade last week for the flex room where we've got a pending order back below 103. We could bump that up today to probably 103.50. In fact, I'm going to do that right here. So this was literally, I did this on Friday because the market kept pushing it higher. So this is my flex 1 Cad Yen 103. Let's go 103.50. Okay, and we'll put our stop loss above a recent high, so 104.50 or so. But we're going to try to target the round number at 100 or lower. So it's a stop sell, which the good thing is we're not getting filled, so we can adjust it, right? If price goes up, we can adjust it to a recent low. So I'll keep doing that. Stop sell, right? Do I think the JPY is correlated with oil? No, I don't. Not at all. I think the JPY is correlated with the Bank of Japan, which is throwing money at the situation. They want a weaker currency. They're getting it. There's going to be some reopenings in Asia. There's risk appetite coming with it. They're trying to promote stimulus, accommodative monetary policy. Unlike other parts of the world, like the U.S., like Australia, like New Zealand, like the Bank of England, like the Bank of Canada, all these central banks that are raising rates right now, Bank of Japan isn't. They're not touching rates. There's no discussion of raising rates. So I think that's why the BOJ is kind of falling victim to that potential carry trade, where it's a zero yielding currency. And that's where the big story is this year and the next month, maybe the next 1 to 3 months, is the ECB, European Central Bank, may finally come off of zero for the first time in the last 10 years. So if the ECB is going to raise rates, that's a big story. Right now it's BOJ, no raising rates. ECB hasn't raised rates in over 10 years, but it's being discussed now. And the Swiss National Bank still sitting at negative 0.75%. So we have to see how they play out. Yeah. So that's that. Any of the currencies, all the yen pairs, like I said, just be careful on the yen crosses. It's a hard one to fight. I know the technicals look great, but you got to be trading small. You got to be patient. They don't want to stop right now. I did take a little stab on Cad Yen early. I'm upside down. I still have the 103.50 that I'm adjusting. I'm excited to get in that trade, but I will keep adjusting that as it goes up. I'm prepared for a trade to go all the way up to 106. Now I have a daily overbought condition and a weekly. Again, I don't see these happen very often, so this is why I'm in the trade. When we have overbought conditions with divergence on this higher time frame, like a daily or weekly time frame, I start to get in and start to anticipate, direction to start to snap back. So, but it could be ugly. Like this could snap up to 106 before we have the trade that I want. So I'm just, like I said, just be cautious, just be patient. Trade size is going to be important. Aussie New Zealand still slow, but still resilient to the upside, possibly pushing up here to 113 to 114. Dollar crosses, I'm still looking for a dollar correction, so dollar weakness, and that hopefully will translate into Aussie dollar continuing to push a little bit higher. If we can revisit maybe this level around 75.50 to 76. If there is enough dollar weakness, are we going to form? Ideally we'd be buying Aussie dollar down here at around 6,700. But it is what it is. Like it comes up here, maybe challenges 75, pulls back, and then challenges 8,000. That would be a big pro commodity based run. That'd be a big risk on run, and I'm not sure if we're really going to get that as of yet. But I am still long on New Zealand US dollar for some pocket trading. Back towards 66 and 66.50. It's highlighted on the chart here. I'll go to the daily time frame. It's easier to see. There we go. So there's a nice little pocket trade, resistance around 68 to 6,900. And if we have dollar weakness, I'm looking for that to continue. We could have a low, high, higher, low, higher, high. Find that pocket, grab some pivots, or grab some profits and protect into this resistance. I'm still long euro dollar. I'm still long pound dollar, and watching those play out. Okay, we also talked about some exotic pairs in the flexion. We'll still be watching those this week. The Turkish lira, South African rands, the peso, and the Singapore dollar. I was watching that one as well. TNX, this is a 10-year note. We're trading at 2.97. If we have a hard time capturing this 3% again, high, low, equal, maybe some range trading on the TNX. If it does end up dipping lower, that should also proceed to see a weaker dollar. Okay, anything else? Gold and silver, oil we did. So oil, I have chart alarm set. We're at 119.66. Let's go gold and silver. Gold hanging out around 1850. I think there's still bullishness back towards 19. I am still pretty bullish on gold, but not as bullish as I am on silver. I think silver has a better technical setup. Trading at 22.35. I would love to see silver come back and find this monthly pivot around $24 and hopefully start to see a reversal pattern where I could be confidently bullish on silver getting back up to this high around 26. If we end up creating a bullish pattern here, that would be an excellent trade to take this all the way back up towards $29 to $30. longer term, if silver can break above 30 bucks, we're looking at 40, $45. Again, more medium to long term on silver, and that might be a big play against the dollar. That could also be a big recession play. If we truly get into that recession metric, I know that we're talking about quarterly GDPs. If there's two negative prints, that's technically a recession. But with China coming to reopening, that could help alleviate some of the bottlenecks in supply chain issues. Maybe be pro growth and accommodation. And if China's accommodating, the other parts of the world might do the same. But it's going to be interesting because I think, fundamentally, China needs other parts of the world way less than we need it. So China's reopening is probably more substantial for its own growth and maybe influencing some international growth, but they don't need it as much. I think the U.S., in order for the U.S. to see growth and see the stock market recover and have this big bull market rally to fight back this year, I think they need China to reopen. I think that parts of the world need China more than it needs us. So that's what makes it kind of interesting. But like I said, I'm going to add some exposure this week. We'll talk about KWeb, CQQ, Alibaba, Baidu, Tencent, stuff like that. Some of those big Chinese tech plays that were beat up last year. Okay. What's the greatest pair in your opinion to coincide with the dollar CAD? Well, dollar CAD is going to be kind of beaten to its own drum. Dollar CAD is going to trade like oil. I mean, if you look at U.S. oil, that's what dollar CAD is going to trade inversely to. So dollar CAD compared to oil, you can overlay those two and see the inverse correlation, right? What has oil been doing? Oil's been going up, dollar CAD's been going down. So if oil peaks at, retesting 128 to 129, that could be finding this low on dollar CAD around 1.24, which is why I'm also looking for potential range trade. We also are lining up several pivots in a row now. We have 2 weekly pivots and a monthly pivot setting up here, bouncing off 124. I like that buy trade on dollar CAD. Other than that, there's really not a correlation with currency pair to currency pair. Dollar CAD mostly follows oil. Okay. So I would stick to that. But again, that's what I'm looking for. If we get a bounce, I'd like to see if we get a chance to buy dollar CAD around 124, take it back to a pivot, take it back to a pocket, take it back into possibly range levels, all the way back to 129. Be pretty nice. Okay. All right. That's dollar CAD. Wall Street's going to open here in a few minutes. I'd like to wrap up and get things organized before class at 10 o'clock. If you're interested in joining me and trading with me, you can. $27 for a trial month. Go to the website, pulverreport.com, and click on Systems, then click on Trading Rooms. For anybody interested in trial, it is right there. Flex Trading Room, we trade Tuesday, Wednesday, Thursday, focus on Forex. Equities on demand, we trade Monday, Tuesday, Wednesday, Thursday, Friday, stocks and options. So we're doing pretty well this week, or this year. All things considered, I mean, positive in Forex, positive in stocks and options, weathering the storm, dealing with, everything that the market's going to throw at us. So chart alarm's coming off, 38 above sell puts. All right. Looks like our credit spread's looking pretty solid there. All right. Anyway, that's that. Equities on demand, Catherine. Yep. We'll see you in a little bit. Class at the top of the hour. I'm going to get some stuff situated. I'm going to start adding some covered calls. IP, Robinhood, stuff like that. So those are stocks that left off last week. 47.24. I'm just going to repair it. 47.50. Grab another 25 to 30 cents. Maybe I can get 48. I don't know. Maybe I can do a $48 covered call this week. We'll figure it out. So I'll keep adding to this and talk to everybody at the top of the hour. I will be back on Friday for the Pulver Report, 9 o'clock Eastern Time, to wrap up the week. So see everybody in the trading room. If you have any questions, let me know. That's it. Okay, thanks for being with me today. Happy Monday. Let's have a good trading week, everybody. See you soon. Thanks. Bye.